Alright, so real quick, we're just going to go over the trade recap of how we caught this London session turtle soup plus CRT trade. So go into a daily time frame, right? Unfortunately, we did not get that. Let's go to a clean chart. So unfortunately, we did not get 100% of the range complete, but as Romeo encourages, you take profit, majority of your profit, at TP1 being 50% of the range. So when we look at CRT, we look at an accumulation candle, right? Accumulation candle. We are looking for TP2, the entire range, right? TP1 being 50% of the range, and we'll go back to this real quick. Hop into a 1 minute. Sorry, guys. Okay. Maybe just hop into a 5. Yes. I don't know where it went. Oh. Okay. So bullish CRT, bearish CRT. Right now, what we had and what we were hoping for was this bullish CRT. We have that accumulation candle, 50% being TP1, TP2 being 100% of that range, right? Manipulation being turtle soup entry, where we have turtle soup happen, and preferably you would want price action to be moving, right? Sorry about the candles, but you would want to basically sit within a higher time frame confluence, like an order block, a fair value gap, a respected fair value gap, something like that, right, on a higher time frame. So a bearish would be the opposite. You have the accumulation candle, 50%, 100% TP1, TP2, manipulation, turtle soup entry, and then the distribution, which is the easiest to catch, but also the quickest, so you got to be on time to catch that. Unfortunately, we did only get about 50%, and then we ended up reversing lower. So that was basically the concept we framed that trade on. And if we go back, right, so this is where I entered. We had London, right, coming up, started right here. I liked how we were respecting 4-hour wicks at the time, right? If you've seen my other videos, I talk about using wicks that sweep liquidity as frameworks to use as fair value gaps or just ranges, because wicks are ranges and you can often see price respecting that range. So for example, we look at this wick, this price came to 50% of that wick. The significance of this wick would be that it swept higher time frame buy side liquidity, right? If we look over somewhere further out, right, it'd be the same with this candle. Now, that doesn't mean every candle will respect wicks and stuff, but you just gotta pick and choose and play around and experiment and just trial and error what wicks work, what candles work, what fair value gaps work, and all that other stuff. Going into the entry, pretty straightforward and simple. Initially, I had entered off this. I wanted to see this fair value gap get inverted. Unfortunately, we did not get that inversion, so we came back down, sweeping this. To me, this was classic turtle soup within turtle soup. I mean, to the tick, bro. If you entered right there, right, and held a 10-point stop, would have been perfectly fine. And then here's the phenomenon that I've pretty much learned. So when we rally during London and make a high, and before a news event drops, right, the 8:30 CPI news, before this drops, if we're retracing downwards and we're sweeping liquidity, right, key thing, if we're sweeping liquidity, most likely, if we're following that higher time frame narrative of CRT plus turtle soup, then most likely that will be the real move within Q3, right? So if you had entered here, you would have banked. We can go and look at my exact entries, and I decided to mark out every single fair value gap, order block, imbalance. So the yellow will represent fair value gaps. The reds will represent order blocks. And you could let's just go through and see how price reacted, right? So we got that imbalance. I wanted to see it fill. So we'll put on executions. I'll log in real quick. Give me 1 second. Okay. So, want to see that inverse, right? Did not get it. Ended up coming down. Turtle soup entered at, I believe, I don't know. Let's just put on executions. So 106. It's about right here. That's where I entered. Second position. 2 more contracts. Got this 15-second. We'll go down to 15 seconds real quick. Oh, man. Alright, fuck. We're not doing that. 15-second fair value gap. Tapped into it. Got close to equilibrium. Rallied. Came down. Tapped it. Top of it. That's what I like to see this. I like to see price tap it and then reject away from it. Tapped it. Then rallied for about 10, 20 handles, right? Came down, tapped this fair value gap, invalidated this fair value gap, invalidated this fair value gap, kept this one as a breakaway, right? Expanded, more fair value gap on a higher time frame. These fair value gaps within fair value gaps are just 1 minute within 15 minute or 15 minute within a 1 minute. You have more fair value gaps and imbalances, order block, and just look how price taps into these fair value gaps and these order blocks, right? This first one was very, very nice. We tapped equilibrium, rallied right away, made that significant high, came back down, tapped 15-minute fair value gap, rejected, closed outside of the fair value gap. That's a good indication. Rallied. Can consider this as a micro turtle soup. Expanded, fair value gap, imbalance, fair value gap, fair value gap, fair value gap. Just creating all fair value gaps, right? Forget all this. Pretend this is not here. All fair value gaps for price just to come in and tap in for liquidity. Then we come into this blue zone. This blue box initially was a 4-hour fair value gap. We invalidated it. Then I noticed that there was a 1-hour fair value gap. We also invalidated it. Chopped around a bit. Tapped into this daily imbalance, right? If we look at the daily time frame, we have that imbalance right there in price action. Okay. Going back to the 1 minute. We tapped right into it, came down, filled back that 1 hour and 4 hour, came back up, filling all this liquidity, right? Imbalance, sweeping liquidity, filling imbalance, straight back to imbalance, filling all this liquidity from overnight, came back up a little, tapping into more imbalances that were already initially filled but left by sell side. Came back down, swept, tried to sweep this low liquidity but couldn't really, so this would be the only considered sweep of liquidity. Bounced around, got that news drop, and then eventually gave us the initial move that we wanted, right? Then we came down and just sold off all of London price action, and this past week continuing our bearish motive. So unfortunately we did not get that full range extension where we were hoping to aim for these levels to complete the range, but this was still a great trade and a great learning experience for me. It was very nerve-wracking seeing price come back down early in the morning. I wanted to wake up before news and I was a bit late. Actually, I was still on time, but late to when I would have liked to wake up, and then just rallied and crushed it. So W trade, this is the trade that made me $1,000 across 3 accounts copy trading. Would have been more if I had used minis, but I was only comfortable using micros, so that's what I used. And yeah, if you guys have any questions, you can feel free to ask them in the comments or DM me, reach out to me. I hope this was helpful and some nice insight, and I'll catch you guys on next video. Take care.